Hello. What's up, guys? It's Jonathan. In front of you, I'm looking at gold and silver. We have a futures class today. Our September futures program includes 6 live classes that Pablo and I are going to teach. As I'm preparing for our first class today, in today's class, Pablo and I are going to share our 3 favorite trades. Let me show you how I'm looking at the market. Maybe you'll learn and see something that can benefit you as well. So let me explain. In front of you, this is what we call our metals edge. I'm using a cycle. I'm looking at things based on quarterly. The implied ranges, this is going to show me the straddle. This is going to show me how much volatility is in the market. And we are going to look at gold and silver and gold and silver volatility. Okay? Apply. Okay. Here's what we got. Now I know this might be a little confusing for some of you who are not familiar looking at screens like this. Let me simplify it even more. Let me take off the gold. We'll put the gold back on, but for now, okay, apply, okay. Let's take off the gold. Okay, so now we have silver volatility. Here's gold volatility. But we're just looking at the silver contract. Now, since we are getting our implied prices from the options, it's not going to be the cleanest data. You're going to get these little spikes, but if you just smooth it out over time, you'll get an idea of where volatility is. What I want to show you, though, is I want to show how futures know where their volatility is. And the reason futures options know where their volatility is, it's because of gamma, optionality. So for a market to move outside of its straddle, it's got to be really convincing. There usually needs to be some news to really push something through its straddle, its implied volatility. So how about this? Why don't we go on a longer time frame so you can see, using the same study, what it takes to outperform your implied volatility bands. So let's go back and look what we have. This is recently, just got down here. Silver went right up to gold and sold off. Not much going on here, not much going on here. Explosive move. Notice when it does go through that implied volatility, all volatility spikes. Spikes, huge move. Scroll back and look at more of like 2019. Here you can see silver staying within its implied vol, staying within. It's trying to break out. It's trying to break out. You even see that vol increasing, but it doesn't. Nothing going on. Lots of sleepiness. Well, I think we know what's coming now. COVID's about to hit, right? Beginning of 2020, this was so wacky because silver sold off after COVID while gold rallied. But look at these implied vols. Crazy, right down here to the bottom. And that's when we have the bounce. Bounces into the next quarterly session as well. And then you can see here after COVID, vol still very high, very unsettled. And now we get closer to present day. Notice how volatility is slowly coming in. The bands are getting narrower and narrower. That's just volatility getting lower and lower. Right now, though, silver is right back down to that implied volatility level. I love being long silver. I like being long silver better than I like being long gold. Where can we get in, though? Now that I have a pretty good idea of a trade that I'm looking to do, we just use what's called our high value target tool. And all this is 3 standard deviation bands and 4 standard deviation bands. The idea is when silver trades out the bands and comes back in, you'll get a buy signal. If it trades outside and comes back in, you'll get a sell signal. But if we go back and look at more data, let's put it on a 10-year. Let's go weekly because I want to show you how reliable this high value target tool is for traders. So it looks like the silver contract, or this was 10 years back, We had a sell signal here, pretty freaking good. Buy signal. Buy. Yeah, it didn't really get hurt. Buy. Sell. Buys down here. That's a goodie. But look what we're getting right here, guys. Right now, right now, right now. Silver getting a buy signal. So what can we do? Well, you can buy silver. Just go and buy silver. You can buy silver calls, options, upside options. What I like is a stock called POS. Here's POS. I was a market maker. I was a market maker in POS at the time. We're also getting that that buy signal on a weekly in POS. So for me, I think we're better off going with POS than silver futures because of the volatility. Let's look at the options though. Definitely want to consider everything before making a trade. Remember, since we're using a weekly chart, we need time, right? Time 142. This is what I like. January, 142 days. It's a long-term hold. If you're going to get in this trade and risk money, you're in for 142, or until you can take out a big, big, big profit. 26. I'm going to go back to that high value target tool because I want to think like, what can this do? Well, I think it certainly can get back into this range, right? 32-ish. Nice rally. 140 days. Really volatile name. So this thing could definitely move. I want to be above 32. Ooh. Hey, actually, I'd like to be here. I like this delta. $1.38 bid. A 10 lot, you'd be risking $1,380. Holding for 142 days. That gets you long silver. That gets you long POS. That gets you long on this buy signal. That over time, I think it's proven out to be pretty freaking good. Hope this helps everybody who's coming to our futures classes. Excited to work with you. Excited to share what we find. My name is Jonathan Rose. I'm the owner of Masters in Trading.